This conference will now be recorded.
All right, good evening, everyone. I'm just going to make a quick video here about how to set up the trading view chart with the TIQ context, with the arrows and whatnot. This is it right here. If you go to mytradingiq.com, click on Trade Rules PDF. It says right here, Trading View TIQ Context Settings and Rules. All right. Now, inside each one of these charts, we're going to have the trading view context. Now you are going to go to indicators like this. You'll go to invite only script and put on the context, right? You click on that, it'll put the context on for you like that. Once it applies it to the chart, it's going to apply it with just default settings. Okay, you're going to have to go in there, click on this where it says settings. If you want to have the arrows on, you're going to have to click on that and go to settings and apply the sensitivity setting. It's 0.35 by default. 0.35 is good for the ES, it's good for the NQ, but crude oil, gold, and the YM need to have an adjustment. For the gold, it needs to be 0.05, right? 0.05. For the crude oil, it needs to be 0.01. And for the YM, it needs to be 0.75, like that. All right, so this is gold. The chart that we just put that on is gold, so I'm going to put it 0.05. That is one adjustment you need to make. That's for the sensitivity. Now the sensitivity is going to do two things. All right, it is going to set the momentum arrow up. See, if you look right there right now, it doesn't have the momentum arrow. You click on that, now it does have it. Okay, it's going to set that up, and the no trade zone also. If you choose to put the no trade zone on, that is an area where you don't want to be trading. You can do that. That is controlled. Both of those are controlled by that sensitivity setting. Okay. You should also put this is the overbought and oversold arrow. Put that on. What that does, if you look over here right now, I'm going to say okay to this. If you look over here right now, every one of these black arrows has an overbought or oversold arrow leading up to it. That's giving you a heads up that you're going to be getting a trade set up. A black arrow is likely to be coming up. Right? It's not definitely going to come up, but it's likely to come up. Like this one right here didn't get one because something else disqualified it. Now, if we go here, I just described to you how to set this sensitivity setting part up. That's for the TIQ context. All right. Those are the different settings that you need to do for the different markets. Those are the most likely ones that we're going to be using. If you have a different market that you want to trade, just get with me and we'll figure out what you should be using. Okay, now that's just a suggested one. You can play around with that and find what suits you the best. Basically what that is giving you is an idea of when the slope right here in the long-term direction, that's what these outer bands are. These outer bands are long-term direction. You want to be trading when you have direction, the long-term direction. If the outer band is red, that means the short and long-term direction. In here, the short is the darker one, the long-term is the lighter one. They're both going in the same place, the same direction, I mean. If it's white, they're not matching the same direction. If it's back to red, they're both matching the same direction. If it's blue, they're both going up. If it's white, they're not both going up. It's simple, simple enough process, okay? That is just to give you a heads up. When it's trending like this, that's when you want to be trading. You want to be taking these trades in here. When it's trending like this, you want to be taking these trades. Okay. Now, the time right now, it is 9:34 p.m. So probably not the best trading time right now, but you can see earlier today, there was some great trades that were traded. Anyway, that is how you set up the context in here. Now, if we go back here to this, again, this is it, mytradingiq.com trade rules PDF. All right, in here now, there are three parts to every trade. There's the entry, the risk management, and the exit. So I go through the entry rules right here. The entry rules for the trades for a long without the slingshot, that is without using anything down here, and along with the slingshot. This is going to be your continuation trades, your trades that don't actually hit the ribbon on the pullback, your trades that the black line might be in the gray area instead of the red area. That's what those are going to be. You're going to need the slingshot for those trades, all right? And that is going to multiply your trade number by 2, probably 3 times than just waiting for it to pull back. The more conservative one would just wait for it to pull back into the ribbon with the black and the red. Okay, this is the more conservative, and this is the more conservative. Right, those are the more conservative trades. Now, you're gonna probably want to use different time frames. The ones that I'm using right here, I'm using 7-tick range for the gold, the crude oil, and the ES. I'm using 16-tick range right now for the NQ, and I flip back and forth to a 20-tick range every now and then. The risk management for this, right? There are 3 parts to every trade. The entry, these are the rules for the entry. The risk management, these are the rules for the risk management right here. Okay. Now, with a 7-tick range bar, I always use a 10-tick stop, and I trail the stop to break even after 4 ticks in profit. With a 10-tick range bar, I use a 15-tick stop, and I trail the stop to break even after 6 ticks in profit. You can just see it all down here. 16-tick range bar, 20-tick stop, goes to break even after 8 ticks in profit. This is what I use with the NQ. Sometimes I do this one with the NQ with 20-tick range bar. This, I'm going to fix that, should be 25-tick stop, and trail the stop to break even after 10 ticks in profit. Okay. All time-based bars, you'd be looking at the prior swing high or low. What I mean by that is if, let's just make this a, let's make it a 5-minute, okay? And if you had an opportunity to get in, the arrows still work even on these bars. The arrows still work and they still get you in great places. But if you had a short, say right here, this said to go short right here, well, the prior swing high is going to be actually right here. You'd want to put your stop somewhere up above there, okay? And your target would be at least the bar that got you into the trade, at least down here. So you'd have to do a risk reward analysis on every single trade. You have to do a risk reward analysis. Like over here, your stop on this one right here would have to be up above this bar. Your target would be down below this bar right here. Okay, and you see that would have kept you in the trade for the whole time. This one would have kept you in the trade for the whole time. This one would have gotten you a profit, kept you in the trade for the whole time. That's if you want to use a different kind of bar, a time-based bar. Okay, if you don't want to use a range-based bar like I use all the time. And now that is the rules for the entry. They're in here. You'll see me doing this over and over again in the room. Okay, the rules with the slingshot and without the slingshot. I showed you. Well, if you do it without the slingshot, all right, then you're just looking for the black line here to be in the red for a short trade. All right, let's just go over that for a short trade right here without the slingshot. Black line is in the ribbon. It must be on top of the ribbon and in the red. So it's on top of these lines right here in the ribbon and it's in the red. All right. You can just take a down close off the ribbon whenever that happens. Don't even worry about what's going on down here. You take a down close off the ribbon when that happens. All right. It's as simple as that. If you want to do it with the slingshot, well, then you can use the black line can be in the gray as well as the red. It doesn't actually have to even touch the ribbon, but down here in the slingshot, the white line, the lead line, that's what that's called. The white line has got to come out of the overbought for a short trade. It's got to come out of the overbought, cross out of overbought, down over the overbought level right here, down below 95. It's got to make that cross. All right, you're going to have times where that's going to be like this over here. And in this case, it made the cross, but everything else disqualified the trade. So there was no trade there. But like right in here, right here is where it crossed down. So your entry point would have been right here, and you would have enough room to get your stop to break even. But that's what you're looking at. Okay, like right in here, it was sideways a little bit. It was sideways a little bit right here, and then it finally gave the down close. Your entry point would have been right here after the down close, right, to take that profit. And this one right here, it just popped up and then went back down. You see how the little arrows, the small arrows, are leading up to the actual arrow. That's how you enter the trade, right? So you enter the trade. Now your risk management, those rules are pretty clear. You throw your stop at break even after X number of ticks in profit, depending on what range bar you're using. And then the exit. Now I use 3 different methods to trail my stop and to get out of a trade. First, I'll look left and I'll see where the swing high is or low, depending on what direction I'm going in. And I'll expect price to get there. I'll also look in the DOM, and if I find a place in the DOM that looks like a great spot for it to go to, I'll use that. And yeah, so I trail the stop until the green line. Yeah, the green line down here. When the green line, what you anticipate with this green line? Well, this one, in case it's red because it's going short, you anticipate that's going to get down to the oversold area. That's the third one. So 1, whatever you find in the DOM, I'll teach you how to do that. That's part of the training you receive. 2, you look left. 3, the green line should lead you to a lower swing. As the green line gets down to the bottom here, you should put in a lower swing. If it's going if it's bullish and it's going up, you should put in a higher swing when it gets up there. So you trail your stop with a little bit of room until it gets down there into that area. Once it gets in that area, then you want to trail your stop really close. Okay, when it gets down to that area, trail your stop really close. All right, and that's really it. So you have the entry, the risk management, and the exit. Those are the rules for the trade setups right there. The entry, the risk management, the trade setup. These are the rules for the entry. Long and short, I just went through the shorts. I didn't go through the longs. The risk management, how to manage your stop, where to put the stop to begin with, how to get it to break even, when to get it to break even. And after that, how to trail it. That's the exit down here, the trade exit. If you guys can master all that, and you should master all that before committing real money, okay? If you only got one of those down, if you only have the entry down, don't use real money. Wait until you get them all down, right? That's the simplest way for you to get forward. I mean, to keep moving forward with this, all right? Risk management is the key. Anybody can enter a trade, anybody can exit a trade. Risk management is the key. Get a risk management strategy that you are happy with, that you're comfortable with, and just use it again and again and again. Never waver from that risk management strategy. All right, so right over here, you can see there was a short right here while I was doing this. There's a shorting opportunity right here. See right down here, that came out of the overbought, crossed down out of the overbought, and it triggered the arrow right there. Long-term direction is bearish, so this should, where should it go? Right here, right? And if you look at your DOM, it's probably going to show you something else right there, but that's what you would anticipate out of this trade. That happened while I was doing this. All right. If anybody has any questions, you can email us at support@mytradingiq.com, support@mytradingiq.com. By now, you probably already have my phone number. You can text me at my phone number. If you want to set up one-on-one training, let us know. All right. That is it. Thanks for watching.